Hey traders, this is Blake Morrow with Traders Summit, and I'm excited to have Beat Nussbaumer here today to actually talk about the CPI data and the dollar response. Beat or Beat, nice to have you back.
Hi Blake, thanks very much for having me.
I'm trying my best.
Don't be worried, don't be worried.
So,
well, to be honest, it's been the sort of excitement, or the so-called excitement, for the week. And we had a bit of dull Monday, Tuesday after the sort of bigger last week. To be honest, we kind of knew that the CPI is going to be somewhat coming off, at least in the months and months, in the core and the headline CPI. Some of the COVID-related stuff that was behind the surge of CPI of late, just sort of cooling off a little bit. But to be honest, after what we heard from Fed Clarida last week, the non-farm payroll print we had, I just think Clarida let the genie out of the bottle. I think that was the message, when the sort of dovish leaning Clarida turning hawkish, that probably the debate is really very, very live in regards to taper. So I continue to be honest, I squared up some of my dollar longs before the CPI, which was not a view change. It was just a tactical thing. 117 big level in the euro, 2021 low. There's just no point if you sort of know that most likely get a weaker CPI. How much do you really get? Or I was prepared, plan B, if the euro breaks, if you get an upside surprise in CPI, I just sell the break and put my dollar longs back on. So I continue to run long dollars. I use the rally in the Aussie and the small rally in the euro to start buying dollars again. I really think we not far from shifting gear. I think more and more Fed speakers are really sort of lining up towards this sort of more hawkish message that we're probably going to hear in Jackson Hole in end of August. I wouldn't be surprised if Jay Powell has to sort of up the ante now. I think the data is there. They told us that, yeah, they're outcome based, but once they see the trend is rolling, they kind of start to act. The other stuff I've been looking at was all these sort of job openings versus employment, blah, 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 blah. So I still actually think the Fed is completely on the wrong track, comparing the current employment situation with 2008. So I really think the situation is so much different. To be honest, I wouldn't be surprised if one of these next non-farm payrolls is going to be like 1.5 million or stuff like that. They really get a big number back. Maybe if you want to talk about one of the risk factors, the Delta variant is creating a little bit of a possible hiccup. We saw oil selling off quite a bit in recent weeks on the back of this, again, new demand worry, especially with the way COVID is going in Asia. Risk in FX has reacted in the last few weeks, sort of slowly grinding lower. The standout, which the one thing that I'm still wrong, and I'm glad I don't trade it, is equities.
Right, exactly.
Right. So because, I'm sort of more macro driven. I don't mind short-term punts here and there. But if I compare the news from first half of the year to the sort of recent weeks, the news has got worse. And most of the asset classes have sort of started to take that into account and reacted or corrected a little bit. US equities, and I still expect a 10% correction, but because I haven't suffered in FX with the wrong view in equities, I'm able to keep talking about 10% drop in equities because it hasn't hurt me in FX. But I think there's two stories going, which is not very easy maybe in the near term to see which one is going to be more dominant. Is it the dollar story around taper, or is it this sort of risk having to adjust a little bit for COVID or slowdown in China, whatever? So we're probably muscling like two stories, but the one I'm really happy about is the dollar story. I think the dollar story is finally on. We have broken a few levels in the DXY that sort of lets me hope that the story is on. Now we just have to break 117 in the euro, which is obviously a big part of the dollar index. And so I'm running long dollars, not limit long, because I just want to see if this sort of benign or lower CPI creates a little bit more of take profit. But I'm buying any dip in the dollar, and I think everyone who is short dollar should just use this dip to just square up and go long.
Yeah, it's interesting you point that out, and you mentioned a key level in the euro, the 117 level. I know us as technicians, it's a big level. It's a big big Fibonacci 38% retracement of, you know, a wide 2020, 2021 range. But when you're looking at other currencies and other, you know, let's say predominant, you know, FX majors, are there any other currencies that stand out to you that you're looking for levels to break specifically?
The Aussie. To be honest, I've been short Aussie for many weeks, and to be honest, if you look at the charts, Aussie actually only came off, right? But it came off in the beginning as more as a response to the sort of large moves we had from the 2020 lows, Aussie dollar, Aussie cat, Aussie yen, the whole Aussie block, which is the sort of China in COVID and out of COVID first. So Aussie has really carried the brunt of this entire recovery. So part of this down move was really just a correction from probably overbought situation. Then we had the Bank of Canada taper that flipped the whole Aussie CAD trade. Aussie CAD is now down about 7-8%, really leaning into the Aussie. Now we suddenly get like this question mark about China growing second half of 2021. We have local lockdowns in Sydney and Melbourne. Now people talk about the recovery is probably, you know, 6 months, just shifted further into the future for another 6 months. I didn't expect the RBA to, you know, flip-flop on taper in the last meeting, but I would think they're still gonna flip-flop. I don't think they're gonna go ahead with taper. So then we have like what we already mentioned, this whole, you know, COVID flaring up in Asia. Again, fresh worries about bottlenecks. The whole story is just not going away. So I'm not talking about a collapse or a repeat of 2020, whatever, but I just think things have to reprice. And I think the Aussie story has been a fabulous story from March 2020 onwards into early this year. And I think now we have two problems. We actually now already sold off, but now the actual news starts to come in, you know, Australia, China, whatever. And now we have a dollar, now we have a possible taper. The Aussie is the EM, I call it, of G10.
Yes.
Right? Aussie is the equivalent of dollar rand in the EM space. So if you now have a Fed taper really gearing up, and to be honest, personally, I actually think the Fed might have to act a lot quicker than what it's priced, because I'm not a big believer in transitory. Well, let's say I'm partially a believer in transitory. I'm fully aware that some of the factors are transitory, but I think what the Fed got surprised is two things. A, and some members did acknowledge that CPI got a lot higher than they expected.
Yep.
So now, even if you have transitory, it's going to come off, but what if it doesn't come off?
And are those higher prices going to be sustainable, right?
The second thing that screws them right now, in my opinion, is transitory was a great idea, and it was not a wrong idea, so I don't blame him. But now suddenly transitory becomes, instead of a 3-6 month story, it might be a 6 to 12 months or 12 to 18 month story. So prices, higher prices that manufacturers face, they're going to start passing that on. We see labor shortage across every sector in the US. I just looked at some charts yesterday. We have extremely all-time highs in every sector in the US economy of shortage of labor or opening jobs. So wages are going up. That's the last thing the Fed needs, because wage inflation is sticky. That's not transitory. Right? So really, I wonder if the Fed, and the reason why I believe they're going to gear up now is the Fed needs insurance now. I think they start to realize, you know what? And I don't blame them, because to manage this situation, the worst sort of shock that we probably ever had since World War II or whatever, I don't want to say I would have had all the answers. So it's not easy, right? So I don't blame them for that. But I think what they notice now is this thing is kind of as a moving target, right? And in order to kind of, you know, if you start to become a little bit uncertain, they need a hedge or an insurance. And insurance, what do you give away if you start taper? 10 billion less, 20 billion less. The economy doesn't need it. It's not 2008. You don't have tight financial conditions. It's kind of loose as it is, right? So it's not even needed. And the problems we have in the US employment market is not something QE or the Fed can solve. You have a sharp increase in retirements, right? Since COVID, so people just go like, you know, screw it, I retire.
Right.
We have some people that just don't want to go back to the job they had, mainly in hospitality. And then we have those, I have no idea how many they are, that still receive support, and they go like, I go back to work when the money stops flowing, right? So you have structural issues that have nothing to do with the Fed, with QE, whatever. The Fed can't solve it, right? The Fed cannot solve it. So really, if they just want to buy some insurance, just bloody start tapering September, whatever. It's probably not going to be September. In September, they're going to announce it for December or whatever it's going to be. But I think the story, and I think this is why the dollar will net start to hold now. It's incoming, right? Back in March when we were at 117 in the euro, or let's say at the dollar highs for the year, the story was not as clear as it is now, in my opinion. So fast forward in August, going into autumn or into winter, end of the year, the story becomes a lot clearer now. And I think the market starts to realize the window is closing, taper is incoming. It's not a question of if, it's just when, September, December, whenever it's going to be. And I think Jackson Hole is going to propel the dollar higher. I think Powell is going to be quite clear in August that it's coming, right? He may still talk a little bit about discussion and blah, 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 but they told us in June, taper is live in their discussion. So how much heads up do you need? If they start to taper in December, that's 6 months heads up, right? So yep. I think the story is here, short term, maybe a little bit complicated as this market is these days, right? It's never straightforward. Yeah. But I think as a trend, I think the dollar story is here to stay. I'm playing long dollars, and I just run with the story. And as I mentioned in the beginning, Clarita just gave me the confirmation in a way of that maybe I'm on the right track here.
Very good. And I think a lot of the other Fed governors, regional Fed governors are falling into line as well. So
absolutely.
All right. Well, Beat from Macrobeat. If you guys don't follow his information, you can find out more about Beat down below. And if you like this type of content, make sure you give us a thumbs up, subscribe to the Trader Summit channel, because we actually will have a lot more interviews with Beat. And we're also, you want to get more information from him and some setups and his analysis. Make sure you're visiting our site regularly. Beat, I'm trying to say it correctly. I'm trying to pronounce it correctly. I just want to say thank you so much for being with us today. And people are going to love your updates. So thanks again. And we'll see you very soon.
Thank you very much for having me, Blake. Have a lovely time. Thank you.
You do the same. Thanks.